Yep, Andrew, I want to introduce you to my friend Ingrid. She's on here. We've
Yes,
worked
hi
together
Ingrid.
in, yep, we worked together in a couple
Hello.
other things.
I think I
Yep.
talked to you like a year ago. Is that
There
right?
you go.
Yeah, Ingrid.
Probably.
Yeah.
Never know. But
Right.
it's great. I've invited her. She was very good, a team player, and now we have two really cool things. She did ERC. She'll do really good with FICA tips. She watched the recording. Andrew made that recording. He did a very good job too. So excellent. And then Ingrid, as we go through, if you have any questions, just pop your hand up and ask it because this is ready to go. Stephan built this. He's already done clients. There's no waiting on it, and this is ready to go when I start making money. So go ahead, Stephan.
All right. So basically, what this is, 80 to 90% of business owners in these particular industries, food, beverage, and then just this year, as of 12/31/2024, we added we added beauty and personal care into this as well. That came in with the one big beautiful bill. And so for 2025 filings, the beauty and personal care can also take this credit. So what it is employers are not supposed to be paying FICA taxes on tips. They're not supposed to pay them. So, and most people think, well, yeah, my payroll company's taking care of that, but they're not. I've had conversations with most of the big executives of the bigger payroll services, and they're like, yeah, we know this problem exists, but we're not going to accept the liability. We view this as the business owner's responsibility to go after this credit. We'll give them the ammunition, but we are not going to go after the credit for them. So a lot of employers are thinking their payroll company is taking care of this, and they're not.
Mhm.
They're reporting those tips as taxable income subject to FICA taxes, Social Security and Medicare. And the only way that business owner is going to get that money back is to go after and pursue it individually through their business. Let's say they have an S corporation return, they'd have to pursue it through the S corporation return first, and then it would flow through to their personal return. So ultimate benefit is the owner on their personal return. So the average refund is about $51,000. That's the average refund. And not only can you go after the current year, but you can also go after the three prior years as well. So this is amendable. So this has been around for a long time. Like I said, we added the beauty and personal care this last year, but the credit's been around a long time, way more than 3 years. So we can pursue the last 3 years of this as well. So, for example, I have a client in Colorado. She has 6 restaurants, and we were able to get her back $185,000 over the course of 4 years, the current year and the three past. So, like I said, payroll services, they may offer to provide the reports to the employer, but they're not going to pursue this for. They see that as a liability. They don't want to reduce the payroll taxes for the amount of the tips. They don't want to accept that responsibility. So, as far as determining whether someone is taking advantage of this, if there's not a Form 8846 on their return, they didn't take advantage of it. And 80 to 90% of businesses are just not doing it. The money out there is huge. Like I said, 80 to 90% of businesses do not even know this credit exists, and they're not pursuing it. So we have an opportunity to go back after that money for them and get paid. So we're asking for 30% of what we find as the recovery fee, which you get paid on. So it's lucrative. And like I said, if you're going after it got even bigger. We've seriously expanded the breadth of this particular credit because we added the beauty and personal care into this industries in this last year. So we're ready to go. We've been doing this for a while. But we're just ready to go on a much grander scale. So this is the landing page. You'd each have your own attributable landing page of this. I'm still working on it. I'm just looking at competitors. I'm looking at what everybody's got on theirs. Make sure that we're the best out there as far as landing pages. See if there's anybody else out there that's got, some frequently asked questions. I'm just trying to finalize this. So then once I have this, then we can have one main landing page and all the other attributable landing pages off of this. So make the least amount of changes. So get all the content ready first, and then make some visual improvements, and then we're ready to go. So we also have materials that you can use to participate, to market to business owners, especially in regards to those industries. So we have flyers that you can hand out, frequently asked questions flyers, and then we've got one that's designed for business owners in the restaurant industry that you could hand to. It's designed to be handed to a maitre d' or the head waiter or waitress, something that would encourage them to give it to their business owner. So let me open it up to questions.
Okay.
Does anybody have any questions?
Okay.
Renuka, you
Does
have
it,
any
does it
questions?
matter if the employer is full-time or part-time?
No, it doesn't have anything to do with that. So it's an employer the employer is eligible for the tax credit. So it's more about, how much credit do they have, and does this make sense for them? It's not about full-time, part-time, a business that's paying employees that have tips that meet the requirements. That's all that's required. It's not about time. It's not about income. Yes, we need to have a tax liability and a personal return. It works very much like, the R&D credit. If you don't ultimately have something to go after on the personal return, you're not going to see an immediate benefit from it. Doesn't mean that it's gone. Doesn't mean you can't use it in the future. It just means you're not going to see an immediate benefit from it. But it's not tied to the amount of time that someone is participating in this business. There's not a rule like 100 hours or 500 hours like some other types of credits, and that doesn't apply in this industry.
Okay, and my second question is, what if the business or the restaurant is closed? They still do it?
Still can. So we can go after if there's anything in the current year, we can go after that, and we can go after the 3 years before they closed. So in that case, it's very much like ERC. So just because a business closed doesn't mean that we can't go after a credit. Does that answer your question?
Yes, thank you.
Okay.
Stephan,
Yep.
I got a question. What kind of information do you need? Do you need the full list of employees?
Yeah. So we'll need
Is that how it's
there's
calculated?
Yeah, so we're going to go through so yes, there's a few things we need. So most of the information comes from payroll reports. So we need to know how much they're getting paid per hour, because that makes a difference. And I can show you a little bit. Hang on one second. Let me bring that slide back up, because I do have a calculator that's on this landing page.
Because the pay per hour has increased every year.
Yeah, and that makes a difference only to the extent that for most businesses, can you see my screen again?
Not yet.
For most businesses, with the exception of certain states that don't follow the minimum wage rates, those states, the benefit is still good. It's just not as good as it would be. So understand that this was established. The minimum wage rate that was established and that this credit follows was established in 2007, and that's $5.15 an hour. So all we have to do is exceed $5.15 an hour, and we would get the credit.
Okay, yeah, that's
Yeah.
Ohio. My ex-wife's been in the restaurant industry in multiple restaurants for the last 28 years. So
Right.
she's got great contacts with that, and that's one.
So she has a restaurant, or you guys have?
No, she was the general manager at several.
Okay, yeah. So I mean, for example, let's just plug in 60 employees. All making at least, I can add this up. I can put $15 an hour here. It won't make any difference, because the highest number it's going to put here is 5.15, because that's what it's
You're not
calculated
showing
on.
your screen, buddy.
You're not sharing,
Oh,
Stefan.
hang on a
You're
second.
not sharing.
Okay.
And Mike, where are you in Ohio? And Ingrid, where are you? You're my two Ohio folks.
Yeah, I'm in just east of Newark in Zanesville, or east of Columbus in Zanesville, Ohio.
I'm in Columbus.
Oh, awesome. Not too far away.
All right. So you notice that can you see my screen now?
Yeah.
All right. So you notice that regardless of what I put in here, it's not going to go any higher than 5.15 an hour because that's what this calculator needs is $5.15 per hour. Nothing more than that makes a difference.
Okay. Good.
Okay, so this has got in my scenarios, there's 60 employees. They're all making 5.15 plus per hour. They're working 250 hours per week. I'm sorry, their tips is $250 per week, and they work 40 hours doing it. And the reason the 40 hours, it's tied to this. So once this hits 5.15 an hour, the $40 an hour is kind of irrelevant, but we need the information. So because if it's below 5.15, we have to take some of the credit to pay towards the minimum wage rate. So in this scenario, 60 employees, and this is just 1 year, by the way, 60 employees making 5.15 an hour, making $250 a week in tips and working 40 hours a week doing it. The credit on that employer for the year is $59,670. That's 1 year. So like I said, I mean, I've got a client that we just recently with six restaurants, and I can't remember what her employee count was. I want to say she was like 40, 50 employees, if I remember right. So, I mean, it can be significant. And the fact that, they're giving up 30% of it, what I found is these employers don't care about that. They're just happy to get the 70%. That's 70% they didn't even know they had. You're bringing something to them of value, and you're getting them the last 3 years as well.
So that's the 59,000. That's for all the employees.
That's all the employees for 1 year.
Okay. So if we go back the past 3 years, say it's 60,000.
Potentially, if the employee count in the scenario is exactly the same for all years, yeah, it's 60,000 per year.
Because I know several restaurants that I know of, they have 80 to 90 employees.
Yeah, that's not unusual at all, especially if they have multiple restaurants.
Yeah.
Yeah, not unusual. And you're going to find it's not unusual for an employer that's in the industry to go, I didn't know I could do that. It's just not well known. And it's because there's no incentive on the payroll company's part to make the employer aware of this because they're not getting anything out of it. They don't offer this service.
And we're not limited. We're not limited as far as states or we can.
There are some states, and I only bring up there's a frequently asked question about this. There are some states where they don't observe the minimum wage rates, and therefore it's not as beneficial. It's worth pursuing, but it's not nearly as beneficial. Hang on a sec. Oh, here we go. So Alaska, California, District of Columbia, Minnesota, Montana, Nevada, Oregon, and Washington.
Oh,
Because
perfect.
they don't follow the minimum wage rates, it's a different calculation. So it's not as beneficial. I'm not saying it's not worth pursuing. I'm just saying it's not as beneficial than the other states.
Well, from listening to the news, California's $20 an hour.
Yeah. Yeah. So they're minimum wage. So that we just it's a different math.
Yeah.
So it's still beneficial, especially when you're talking about multiple years. It's just we have to do the math a little different because they don't follow the minimum wage rates.
Yep.
Perfect.
So
it's not as beneficial because we have to use their minimum wage rates comparative to the 5.15 an hour, which is set on the federal. So those states just don't follow the minimum wage rates.
So would you say I've got a contact that has 5 or 6 restaurants? Would you just lump it all together?
Yeah. Yeah, it's per business. So it's per tax ID number. So if they're operating all under the same tax ID number, it's really about the payroll because they're being paid under one company. So if
Okay,
there's multiple companies and multiple tax ID numbers, then we have to pursue each tax ID number separately. Because
okay,
it's
that's why I was
about the
kind of wondering,
payroll.
the restaurants, and I'd have to ask her what, if it's all in one, but she has 5 restaurants. So she may have a total of 50 employees each restaurant.
Yeah.
Um,
I would be surprised that they're not running it all as one large payroll. That's what payroll services typically do, is they run it under a large payroll and they
yeah,
break it down per restaurant
okay,
so that the business can see it broken down, but they typically run it as one large payroll. There's benefits for doing so.
great, thank you.
You're welcome. Any other questions? Like I said, we're gonna have some material for you that's gonna be designed to hand, like you're at a restaurant, you're gonna hand it to the head waiter or waitress, the maitre d', and it's designed to get them to think, I better give this to my owner because they may not know about this. As well as some other materials that we can be used for PDF files that can be used for social media and things like that. But that one particular one that we developed was one that is intended to be handed to someone and to motivate them to want to give it to that business owner. You can, ferret me out and you're going to find that a high percentage of business owners don't even know this credit exists.
And what if somebody says, I think my accountant already did it?
There's ways to look for that. So, but we would give them a free, just a second look to tell them, they could give us give us the corporate return, give us the personal return, let us go look for themselves. We give them a quiet second opinion on whether they have or they haven't. So understand why most CPAs don't pursue this. They don't have time.
Yep.
During tax season, they do not have the time to pursue this. This is time-consuming work to put this together just to get a credit. They don't have the time for this. And you're going to find a high percentage don't know any more about this credit than their business owner does. So it's not getting taken advantage of. And it's a
That's just
huge
like the
opportunity.
ERC,
Yeah,
like the
exactly.
ERC program.
Or you've got accountants that tell them, that this it doesn't exist. It's not real.
Yeah,
Just like they did with ERC. No, don't
Yep.
do that. Don't pursue that. It's not real.
yeah, because I think they're the end all be all of CPAs.
Yeah. Well, yeah, they don't also the importance of a second opinion is you don't want to, if you involve the CPA, they have a tendency to want to say, nah, that's not real. If
Yep.
it was real, I would have gotten it for you already.
Yeah,
So it's good to get a quiet second opinion, and we can do that without the CPA even knowing anything about it.
yep,
Get us some
Great.
documents, let us take a look. If it turns out that you're already taking advantage of it, great. We'll tell you that you're already getting the advantage of it.
That handout that you're talking about, I know several GMs and several owners of restaurants. That would be okay to give them as well.
Yeah. Yeah. If you know it directly, yeah, it's even more powerful, but I created it with the intent of giving it something that would cause that particular waitress, maitre d' or whatever's the front office person to want to give it to the business owner.
Yeah,
That's what I built it for. Let me bring that up real quick. Here's what the flyer looks like. Can you guys see this?
Yes.
Okay,
Yeah.
so I designed this, and the wording was all about trying to encourage someone who's in that position to be the gatekeeper, but to want to go, you know what, I better give that to my boss, or I better give that to the business owner. Because this actually could work out that, that's why I put language about increasing salaries, buying much needed equipment, or attracting new employees. to give that person, hey, yeah, I know what's going on behind the scenes. I probably ought to give this to my business owner. Especially when you're telling me that, the average refund is $51,000. That's the average. You have 6, 7, 8, 20 restaurants. Yeah, it's going to be huge for you. A huge influx of cash.
So you're saying, one last question. So our recovery fee is 30%.
30%. And here's what's a little different about this. We're not going after like ERTC. We're not going after 20 and 21. We're not going after years where we have to paper file returns. This we can electronically file. And with an electronically filed return, we also have the ability to distribute the payouts. So we can have 30% go into our trust account and 70% go to the business owner. We can do that on an electronically filed return. We can't do that on a paper filed return.
Yeah. On average, what kind of commission structure is set up under that 30%?
Well, let me bring up that calculator. Give me a sec.
Yeah, there you go. Pull up our calculator. And the nice thing on these things too, while he's looking at this guy, sorry, I'm actually just getting ready to drive out of here, is that ERC, so, they took months and sometimes years. This one is typically taking what, maybe a couple of 2 to 3 months, Stephan? It's not as difficult.
So with an
filing.
electronically filed return, we know typically the day after that it's been accepted. So now it's in the system. Now, a human being still has to do the work. When we do our returns, we also include everything. We think when we're doing amended returns, we're kind of thinking for the person who's going to receive it. What are they going to need for a quick approval? So in the case of a FICA tips tax credit, the form is 8846. So we provide that calculation. We do the math. We provide it just like we did ERC. Kind of want to overkill it a little bit to kind of think ahead and think about doing their job for them for a quick approval. So we include that when we submit the return. We include digital copies that they would get as part of that printout. So quick into the system, and then a human being has to turn it around. So it's still an amended return, but it's getting in the system. So we know within a couple of days whether that amended return has been accepted into the system. Not guesswork like ERTC. Did it ever show up? And of course, according to the IRS, it never was there. It was never, and we have to prove now that it was submitted. Here's the date it was submitted. Here's when we put it in the mail. This, we don't have to deal with that. We know when it was accepted. We know digitally when it was accepted. We have a DCN number knowing this was accepted on such and such a day. Then from there, we just have to allow that processing. So you're looking at more like 4 to 6 weeks rather than, the typical time, because there's no mail time turnaround. It's in the system. Does that answer your question? So here's the calculator. So again, this calculator would give you the ability to plug in the number that you would have from the landing page. So again, I'm using $100,000 as my plug-in. The payout on that is $30,000. And then down below here, you can see what the primary writing agent gets, $12,865. So up here, you plug in the number. Is this $100,000, is that made up of just 1 year? Are we going to be doing any financing on this? Is this 3 years? In my scenario, it's 3 years. So the only difference that makes is the cost of preparing the amended returns. So we factor that in. So this is assuming that it's $100,000 and we are financing, and this is over the course of 3 years. In that scenario, the primary writing agent would be paid $12,865. The level 1 would be $1,574. Level 2 would be $1,574. Level 3 would be $787 for a total of $16,800, which is 70% of the after expenses. Does that make sense? Those numbers make sense to you guys?
Hey, Stephan, this
Yeah.
is Jim Quinn. Um, on the, um, on the yes for the financing, can you click on the yes and make that a no? So that if
Yep.
somebody was not getting financing, we would see the numbers for the commission?
Yep. So that drops it down. It's not much because you're just getting an
Right.
override on the financing. So it drops it down to 12,717.
Right. And that particular calculator for the post years that are to the right of this original year, post year 1, 2, and 3, those are all, they don't apply at all to
They
this.
don't. And I've got another version that I took those off because it's kind of, I built this off of the private insurance. So really, this should be a 1 year. You shouldn't really be thinking about multiple year play on this. I mean, not that you can't, but realistically, what you would have to do is let the business owner make the same mistake year after year after year, and then keep coming back to them and saying, hey, you missed that again. Do you want us to go back after you? You're going to have to pay us 30% to do it, but we'll do it again. So I took that off because it just doesn't make sense. I mean, you're going back to the same person and you're letting them make the same mistake year after year after year.
Well, with that being said, as we introduce this to people for the 3 years, 22, 23, and 24 tax years, because there's also 25, there's a good chance that if we get a client to do this, we could actually not just get 3 years, but actually get 4 years out of this, correct?
Yes. Yeah. You can get the current and 3 years back. And it's possible in the right set of circumstances, you can get one more year depending on if they filed an extension and that year is still open. It's possible to catch a 5th year if you do it just right.
Right.
And
And
we'll determine all of that. We're going to ask them questions like, when did you file your 21 return? When did you file 22, 23, 24? We're going to want to know, do we have one more open year here?
okay, and lastly, the commission is just based upon what their tax credit is for 22, 23, 24. They're also going to receive interest from the IRS on those particular years, but you are not charging anything on the interest?
That's correct.
Okay, great. Okay,
Yeah, they are going to get, anytime you get an amended return, when the IRS owes you money, they must pay you interest.
so it's almost like the interest that they have earned would actually just about maybe pay the entire fee that they have to pay to us.
Quite possibly, yeah, especially if it's a sizable refund.
Right.
Because
Okay.
like I said, in my scenario, yes, I'm saying $100,000 over the course of 3 years, but I mean, the average is 51. If you've got
Right.
multiple restaurants, the average is much higher than that. I'm
Right.
taking into consideration all small, one owner, one restaurant businesses.
Okay, thank you.
You're welcome.
I have a question.
Sure.
What does it mean? It says, will 80% of the refund be financed? What are you talking about? Who's financing what?
So what we did this, we kind of based it on the ERC. So typically, when a firm is financing a refund, they typically won't finance more than 80%. And then the way we built it is there's a small override. So if you're saying yes here, you'd get a small override for the fact that that client chose to finance the refund and get it that much faster. I don't
Oh,
see
I
this
see.
being a
So
huge play because keep in mind, if you're getting your refund in 4 to 6 weeks, do you really want to pay financing to get it even faster?
no, that's why I was kind of wondering
Yeah.
who's financing what.
Yeah.
So the business owner is financing the $30,000 that he owes.
No, so that what the business owner is doing is they're financing a refund so they can get it even faster. So
Oh,
we would use a third party company, typically a hedge fund of some sort, just like they did in ERC, is they would agree to finance the refunds to get them their refunds even faster.
oh, I see.
I
I
mean,
see.
that
So
was
the
that was a smart thing for ERC, and it went over pretty well with ERC when you're talking a year and a half before you get yeah, sure, get my money now. I'll finance that. But
so
here, 4 to 6 weeks, does that really make sense?
yeah. In other words, in this example, they would be financing the 59,000 to get
So
it.
they would get their $30,000 faster.
You should always get something from GP agency that if something was incomplete, I'll verify, Jay, with them. Okay, I think it's okay. I sent in everything that was requested, so hopefully that's good. And thank you for clarifying that too, that we can't talk about it until we're you know,
Somebody needs to
all
mute.
Uncle Dan, you
GPI.
need to mute.
Totally
You
Okay.
understand what's
Uncle
going
Dan,
on.
All right.
Uncle Dean is multitask. We
All right,
like
so
multitask.
what we're talking about financing is this $30,000 refund. In other words, they're getting their refund instead of waiting the 4 to 6 weeks to get it. They're saying, yeah, I'll pay some financing if I can get it within whatever, let's say a week. Okay.
Okay, yeah, that's on this example, the 30% fee was the 30,000, was it not?
Yeah, 30. So it's 30% of the $100,000 that we're going to recover. And the client's saying to you, yeah, I need my money now, so I can't wait the 4 to 6 weeks to get this refund. So yeah, I'll finance it. So we're getting a third party to finance that refund. They get their money faster and you're getting an override on that. That's the only reason why I left it in there. Is
Okay.
somebody had mentioned there's another firm out there doing this. So I thought, no, okay, let's keep that in the calculator just in case we end up doing that. I just don't see that being a huge play. Not in this scenario. Michael, if you're talking, you're muted. Yeah,
They're not waiting 6 months to a year on this. It's going to be 4 to 6.
No. There's no reason why they should. First of all, we're getting it in within a couple of days, and then now it's assigned to a human being to work the case. So I don't see anywhere close to that.
Okay, awesome. Thank you.
Yeah. So first of all, it's going in electronically, so it's not being mailed. So it's a completely different way to get it in the system. Any other questions?
So how do we get signed up for this? You know me, Mr. MC, right?
So this is going to be, so the contracts are out there and they also have the FICA tips tax credit on there. So so as soon as the attributable landing page is up, you're going to use that to send your clients to. You'll have marketing materials to use, and then you'll have the back office to register your clients. So we'll know those are your clients. But the landing page will also have the attribution on it so that anything that comes through that landing page, we know that's your client.
And how do we get to calculate?
So you're gonna have to talk to Stan, the tree shaker, for that. Or I could,
just have to throw in those little comments, right? Questions that I already know the answer to.
Yeah, you're the quintessential MC.
And just kind of something interesting on your guys. I'm driving. If I drop out of going through the mountains here right now, we had a young lady on here that her son, I think, managed 20 very big restaurants, and I think they had, what was the count we said? I think 600. You feel like having a little
600.
fun?
Yeah,
You
I
might pull it up
can.
that.
Yeah, it was
Might pull it up
one
a
of those.
minute.
Yeah, let's see if I can remember that calculation.
Oh yeah, it was pretty
600.
cool.
I know it was 600 employees.
Yep.
Yeah, this is the number I remember. That's 600 employees, guys. That was just somebody who knew somebody that like has restaurants.
It was
600
actually
employees.
Yeah, it was actually one of our agent's son. Actually had it.
And that's
you
one.
gotta share.
Guys, remember
share
this
your
is
screen.
when I'm doing this math. That's 1 year. That's not 4 years. That's 1 year. Scenario where there's
screen so we can
600
see it.
employees in multiple restaurants.
We can't see your screen.
Oh,
Share your screen again.
Nope.
let me share.
Right, Gina?
That's
All right, can you
correct.
see it
No,
now?
you're not sharing. There you go.
Yeah,
All
there
right,
you
so
go.
this is the scenario we were talking about. 600 employees. Now, keep guys, this is 1 year. 596,000. Let's call it 597. 1 year.
Yeah, I've got one gentleman that owns 13 restaurants.
Yeah. And you're gonna, don't be surprised this person says, I didn't know anything about this. Nobody's ever told me about this. It's just not well known. And that's because the tax industry is not going to tell you. They don't have time for this. The payroll services don't have time. They don't want the responsibility. So they'll give you the ammunition if you ask for it, but they're not going to do it for you. They don't offer this service. They don't want that liability. They view that as the employer's responsibility to go after this credit. No, it
How
can
did
be
you say
huge.
we get the flyer?
I'm going to put those out here shortly. One day I'm just trying to make sure that everything
596.
matches. So landing page, everything matches. We'll put them all out at once.
596.7.
Yeah, because what I don't want is have the landing page, we're still making changes to it. Then it's just going to be a lot more work to make changes. So I want to get to the final version, get all the content in there, and then get the final version out of it, and then do the things we need to do to make it more attractive. So
Yeah,
we're
for the
close.
flyer,
Real-
can you
real
put the
close.
nails pictures on there too?
Yeah, I'm going to build another version of that for that industry. So this was the first attempt that was designed for restaurants, but we'll build a for the beauty and personal care
Beauty,
version
yeah.
of that. Yeah, the content will be pretty much the same, but the graphics will be different.
And Stefan, just out of curiosity, what's the commission on the 596,700?
Oof, let's do that one. I had that up before. 596, 700. No, no, hang on. That was 1 year.
So times 4 is 2.386,800.
What am I doing wrong here? Oh, 596,000? No, what am I? Had that up before.
I think
Oh.
it's the wrong
Yeah,
calculator.
yeah, I'm using the wrong calculator. That's why. Yeah. Let me close this one. Thank you. There we go. 179,000. So that's 91,675 per year.
And if you times that by 4,
Yeah. Yeah. You're approaching, 400,000. And you just made a new best friend. You just showed them how to get some serious money back that they didn't even know they were going to understand, guys, that they're going to lose this equivalent of this $91,000 every year that they don't take this credit. You get 4 years out and you probably lost it, never to get it back.
Now, Mike, what would you do with $400,000 commission?
Mercy, I don't know what I'd do, but give it to me and I'll figure it out.
Yeah.
Excuse me, I had to take a phone call, but you were talking about I mean, I saw the website. Will we all have our own replicated site?
You'll have once we get that finalized and get it looking the way we want it to look. And right now I'm more working on content than anything else. I'm comparing other sites out there just to make sure they don't have something that's better than ours. So once we get that finalized, we'll make it attractive, and then we'll put it out, and then everyone will have their own self-attributed version of that, meaning that once somebody comes in off of that landing page, we know that that client belongs to you.
And all the calculators you have here.
Yeah, yeah, the landing page will be exactly the same for everyone. So the calculator, you'll have your own version of this. Only difference between that and this version, it'll just have your information behind that slash so that we know it's yours. And any client that comes in off of that, we know that's your client.
Okay,
Anyone that fills into information in, we'll know that's yours. Anyone that uses that landing page, period, we know that's your client.
awesome. And the commission calculator.
That we'll get that out to you as well.
Okay.
Any other questions?
I have a question. Do you have a different calculator for the states that, like California, the ones that don't follow the minimum wage rate?
I am going to try to build that in here. It's complicated. So I'm going to try to build that into the calculator so that we have that for those states, and we'd have to ask some more questions. What state are you? But right now, that's an added complication. We'd have to do it on our side. So this is based on the other states outside of those 6 states. But that's my goal, is to get that to where we also have those states built into it as well.
And could you say those 6 states again?
Yeah, hang on a sec. Dang it. Sorry. There we go. All right. It's this, some states not using the tipped minimum wage. That's the frequently asked questions. If you're wondering what states, these are the states. So it's Alaska, California, District of Columbia, Minnesota, Montana, Nevada, Oregon, and Washington. Those are the states that do not use the minimum wage rates. Their minimum wage rate is different, which means it's a different calculation. Still beneficial, but just not as beneficial.
Thanks.
So when you're doing that math, and we're going to get more down to what it really is if we add that into the calculator. But really, that calculator is designed to give the business owner an idea of what it could be. We're going to do that math once we know their state. It's not designed to be perfect. It's just designed to give them a ballpark idea how much they could potentially get back in 1 year. Yeah, it's intended to be a marketing tool for you.
And how long does it take to get paid? Let's say that it gets taken care of, the 30% comes back into the trust fund. How often are you issuing pay cycles?
So we're doing it twice a month. So depending on when it comes in. So typical turnarounds in the 4 to 6 weeks. Like I said, we get it in there electronically. That's not to say that, it landed on somebody's desk that's not as efficient and it takes longer than that. But we'll also we're going to file the 8821 so we can check on the status. And we use the 8821 to make sure the client, couple of things. One, they don't have some tax liability that's going to wipe out their credit. And 2, they didn't already take this and they didn't tell us about it. So we'll know that, in addition to looking at their tax returns. But the biggest thing is to find out they don't have some type of tax liability that's going to wipe out whatever credit and nobody's getting paid.
So is this a good program that I can build a team with? I mean, do I have to just be a lone wolf, or can I build a team like
You
Uncle
certainly could build a
Dan did?
team. I mean, the market's out there. I mean, when 80 to 90% of businesses don't even know this exists, the market's out there, and it's gotten even bigger. Now you've got the beauty and personal care industry as of 2024, at the end of 2024. So for the 25-year, this is expanded even more. And you have to understand, this is not going away. This is to encourage, this is Congress's way to encourage business owners to go after their employees to report their tips. So this is not going away. This has been around a long time, and I don't see this going away. There's no sunset out there that's going to make it go away. I don't see this going away anytime soon. And there's other things I would like, if it were like WOTC, I don't see WOTC getting past the end of this year. But this credit is going to be around for a long time. So you could build a nice business off this.
Yeah.
Especially since 80 to 90% of business owners don't even know it exists.
This is Dinah. Stan, I know you knew the answer to that question I was about to exit, but what kind of referral links do we have to give out to recruit?
That's a good question. That's something Stan and I will have to work on. As far as, I mean, you're targeting, the hospitality industry. They're not too difficult to find. You're targeting the owners of
No,
beauty
no,
and
I
health.
mean to build a team.
Oh, I'm not sure I understand your question as far as building a team.
So who do I send them to? I mean, I came in. How do you know somebody will be under
building
me
a team
that I bring in to bring in the restaurants?
to build a team of reps or
To
to
build a
seek
team of
out.
reps, correct.
Stan, I think you could probably better answer that question. Stan, you on? There he
I'm
is.
driving through the White Mountains of, I'm driving through the White Mountains right now, so kind of, I might kind of cut out. But what happens is when we send the paperwork out to basically get signed up on this program, we have kind of old-fashioned clunky paperwork until we get the sites up. There's a spot right there with who referred you. So once you kind of tell somebody about the program, they become excited. We'll send them kind of the sign up form, and then they're going to put you as the person that referred them. So then we'll have it all automated, pretty soon in the next week or two. We've been focused on getting everything up and ready for the unicorn program, but now we get that done. So we're going to go hard and heavy on getting all this stuff done for everybody. And you're kind of in my inner circle. So I'm showing you folks this opportunity before we really push it out to the rest of the world, because I know just about everybody on the call, or Uncle Dan does. We all know each other. So it'll be a very simple system. We'll go over everything, and you can always call me and ask me if you have a question, which many people on the phone on here have already done before. There you go.
Stefan, I have another question.
Sure.
I actually know of a CPA firm that has, oh geez, I don't even know how many clients, but I know they have a lot of restaurants
Mhm.
as clients of theirs. If I was to approach them and they talk to their clients about it, what would be like a referral that I would give to the CPA firm for, finding the clients and getting them signed up?
I mean, what could you offer them?
Yeah.
Well, you're going to find that CPAs are going to be a little resistant unless they understand that the AI CPAs come out with a new ruling in regards to receiving compensation for making referrals. So if they understand, so most of them are going to say, I can't, I would be sideways the Board of Accountancy, but the Board of Accountancy is going to get behind it because they're going to, if they follow the ROI rule, meaning if you can show monetarily that this is in the best interest of the client and that they receive compensation for doing what's best interest for the client, then they won't get sideways of the Board of Accountancy. But that's going to be your resistance, is especially if they don't understand that the AI CPA is coming out with a new way to be compensated and that they would get behind. And if they get it behind it, so will the Board of Accountancies.
That's what I was kind of wondering. Is there a code name or something that I can, other than FICA, FICA tips, tax credits, that
Well, if you're trying to offer some kind of compensation to CPAs, that's going to be their resistance because they consider that to be a conflict of interest per their board.
okay.
But again, like I said, the AI CPA is coming out with a model that says if you can show that this is still in the client's best interest, even though you're being compensated for making that referral to them, then it's okay. So if they
Mike,
say,
you're gonna want to you're gonna want to put them on a call with Stephan.
yeah,
If you
so if
bump
they're
into
telling you, hey,
that group.
that's great, but I can't be compensated that way, that's not quite true. You might want to look on the AI CPA's new, based on the ROI model. So, or yeah, put them on the phone with me And I could
Okay.
show them the way they can do that. Because I'm very much like them. I actually, for a period of time, I surrendered my CPA license because I can make more money being compensated without being compensated as a CPA, that I tendered my license for a while. But
Okay.
that, because of the ROI ruling and doing it that way, if you can show that it's still in the client's best interest, even after you've been compensated, and you can document that, then it's okay.
Okay. Thank you. Yeah, I'll just get them on the phone.
Right. Yeah.
Yep,
Just,
you want
yeah.
to, Mike, you want to stick them
Yeah.
on Stephan, okay?
Yeah.
Anything,
So
just stick them
literally
on Stephan.
they're great resources, and understand they're very much like if you're pursuing clients, you're pursuing CPAs for R&D. They're great resources once you get them past the hurdle where they can be compensated for doing so.
Perfect.
Yep, I'm
Thank you.
not sure if Joyce is still on the call. I know she was on earlier or whatever, but this is a great thing, especially and Andrew, in the Asian community, all the different Asian restaurants. My goodness, up in
Oh,
California, out in Washington, just a lot of things. And then because we have the nail shop and the personal care industries that are coming in 24. So this is kind of an extra special thing for you folks. And my goodness, Ohio, I don't think you're affected by that minimum wage thing. You should really be able to kill it out there.
Yeah, most of
And
the
English,
minimum wage
and
out here in
English.
Ohio, they're usually about $7, $8. Some of them, I think
yeah.
typical
See, the
income, I
Ohio
think.
doesn't apply to Ohio because Ohio does follow the minimum wage rates. And so we're not worried about the $8 or whatever an hour. All we care about is the 515. So as
Yeah,
long as we're meeting the 515, we're good to go. We get the rest of that credit. It's for those states, those ones that I mentioned before, that don't follow the minimum wage rates, then we have to do the calculation's different. It's not as beneficial, but it's still beneficial, especially when
yeah.
you're talking about 4 years.
Typical wages are different. I think it's like 750 or something like that, 780. But
Yeah,
the
most.
actual minimum wage now is like 10.50 an hour.
Right, right. So yeah, but like I said, in those states that follow the normal rules and follow the minimum wage rates, then 515 is all we have to exceed. Once we're above that, doesn't make any difference.
Perfect. Thank you. I got to run. Thank you,
Okay.
guys.
Good to see you, Mike. And the other thing that I like to do too here is like we call it double play, whatever you want to call it, is once we get folks in, we see that they see we've saved them some money on their FICA chips thing, that put some money in their pocket. Remember, we have our other program that we like to tax unicorn, that will basically help them reduce their taxes and help work on their retirement. Once you get in with one program, people are like, "What else do you have?" We have some other very cool stuff
Yeah.
that we can show people.
Yeah.
So I don't know if we have any other questions. We can absolutely go for it. We try to respect everybody's time. Anybody else have a question?
Yeah. Anytime you can bring money into them, that's a great way in the door. It's like, I just saved you whatever, $185,000. Can you imagine what else I can do for you?
Yep, I like that because some of the other folks in the call here have been exposed to the water valve, and John LaPlume, who I actually brought into the table. He's a friend of mine. And there's just a number of things you can do. Once you get that level of trust, we can help business owners in so many darn ways. It's pretty cool. I've never had this many things that we could do to help everybody with landing pages. I talk to Stephan every day. We're focused on getting all those up and going. So my goal is to have that stuff done within the week, and get some literature out that you folks can actually bring out to people. And yeah, it's nice. So we're right in the beginning. I made the mistake. I came into ERT at the end of it. Okay, and a lot of people did. Yeah, well, I'm not at the end of this one. We're at the at the beginning of it, and plus it's going to stick around for a while. It's not going to run out. So that's it for me, Stephan. Anything else
Okay.
you want to add before we have Andrew close it out?
No, I'm good.
Okay, Mr. Andrew,
All right, so
can,
let's wrap it
do
up.
your
And
thing and
yeah, I
what,
have two cases that follow up with Stefan after this. So
yeah, and one last thing. What do we always say in our meetings, Andrew? What are we always teaching people? We do not want them to be considered a what?
A
Say it.
jag. A
it's a
jag.
jag.
And what is a jag? What's a jag?
Just another guy or another guy.
Right. Because we are value added advisors. Like I told Sheldon, Mr. Value Add. That's right. So anyhow, close it up, Andrew. Make sure you get me the recording.
All right. Have a good, wonderful day, everybody, and enjoy the holiday. But get more client in. Okay, see you next call.
Okay.